Good morning, guys. In the spirit of Valentine's Day, it is February 17th. I actually tried to do this on Valentine's Day, but we had a lovely tax deadline this week that made that impossible. I wanted to talk about one of the frequent questions that we get about people who are married. So, oftentimes, when somebody is newly married, and they've not been married before, they call us and they say, "Hey, I just got married. I'm not sure if I should file together with my spouse or if it's better if I file separate." Conversely, we also get the question, I've had it, I think, twice this week already. "Hey, I think I'm going to get divorced. Should I file together or should I file separate?" So I'm going to keep this short and sweet, but I'm going to go through very top level, kind of just some of the frequently asked questions we get on that and what the frequent answers are. So, of course, please consult with your tax pro on your specific situation. However, I'm going to go through just kind of top level, the general guidance that we give these people. So, first and foremost, the more frequent question we typically get is, I got married and I haven't been married before. What do I do? Is it better for me to file together with my new spouse or separate? So typically, what happens is it is generally more advantageous to file joint. Not always. You might be the 5% where it's not, but 95% of the time, you either pay less in tax or get a larger refund if you file together. So the usual answer for new couples is it will typically work out in your favor to file joint. Now, there are cases where new couples choose not to file together. They typically are choosing to pay more in tax because obviously if you file separate, like I just said, usually you pay more in tax because they don't want to take responsibility for something that the other spouse has to report on their taxes. For example, child support, back student loans, back taxes, these things that maybe make your new spouse not receive their refund because it's going to get offset against old child support payments that are due, old federal student loan payments that are due, or back taxes that new spouse does not want to combine their income with and have their refund potentially get sucked up for that. There's things that we can talk about for that, but how to not do that. But generally speaking, they don't want to get messed up with that, and they say, "You know what, that's their problem. I know about it. I'm not angry about it, but I'm going to file separately. I'm going to get my refund and I'm not going to get messed up with that." So that is one of the reasons that sometimes new couples will choose to file separately, even though they know that they are either losing out on money or paying more in taxes. Now, I do want to very quickly forewarn that the first year that couples get married, there are sometimes conversations that need to happen with their tax pro during the year before they they file. Like, it's 2023 tax filing season right now. So during 2022, if you got married, hopefully you reached out to your tax pro and maybe did a tax planning meeting with them, or at least just got some general guidance as to what to expect. Because if you are W-2 employees, you probably had your withholding set as single and then you got married. So you may not have changed it. Oftentimes people just, they don't think about it. So they never change it and they just leave it the same. Or maybe you reached out to your HR department really quick and you changed it very quickly. There could be all kinds of things in there. So it's possible that the first year that you file together, your taxes may look very different, good or bad. We see it both ways. Sometimes it's very, very good because they were over withheld because they didn't change it. And sometimes we see it on the flip side where it's not so good because they didn't change it. It depends what you have set for your employer for your taxes being withheld, because obviously you were filing separately before. That's what your payroll company is, or your employer is doing. If you don't update them, they're going to keep going as is. So sometimes when you combine those wages that first year, it is not as consistent as it could be going forward. So make sure that you're checking in with HR to make sure that your taxes withheld are updated to reflect your new marital situation. On that note, you are either able to, what statuses can I file my taxes as if I am married? Your options are either married filing joint, married filing separate, or head of household. That is it. And within head of household, to further clarify, you can only file head of household when you're married. First of all, you have to have a dependent, so probably a kid. That's in the question. If you're married with no kids and no dependents, then this is off the table. Now, if you do have said kid, you had to live apart from your spouse, be married and live apart from your spouse for 6 months during the year. So that doesn't mean that we got married in June or August, let's say. We got married in August. So obviously we lived apart for January through August, and then we got married, and now I want to file head of household, which is popular because you get lots, you typically can get a lot higher tax credits, i.e. bigger refund, less tax due. That doesn't count because you weren't married for those 6 months or 8 months in this example or whatever. So you had to be married and for 6 months of that year not live together. And obviously have a dependent, so have a kid. So we typically don't see this in people getting newly married. We typically see this when people are getting divorced, but they're not divorced yet, where one of the spouses leaves the home. They now have two separate residences that they are legitimately maintaining, but they have not yet finalized their divorce. So they are still married. That is typically where this comes into play. When you are newly married and you're happily married and all of the things, usually that's not on the table because usually you're living together. So now we have married filing joint or married filing separate. We see it all the time where people go on to TurboTax or they go to H&R Block or whatever, and they both file their own taxes and they do whatever gives them more money back. So that means maybe John Doe files as married filing joint or married filing separate or something, and then Jane Doe files as head of household, or John Doe files as single and Jane Doe files as head of household. You can't do that. And those will get eventually caught up with you because that's a very easy thing for the IRS to figure out is not right. And it's an expensive thing tax-wise. It's an expensive thing to fix because that means you get all these credits that you're not supposed to get. So when it gets fixed, you have to pay them back, plus interest and penalties. So when you are first married, well, not first married, but that's just when the question comes in, when you are married and you live together as a married couple, your options are married filing joint or married filing separate. That is it. So now really quickly on the flip side that I talked about, what about when you are not happily married anymore, but you're still legally married? How does that come into play with this? So the IRS determines your marital status for the whole year as whatever your marital status is on December 31st. So it is February 2023 right now. That means that if you were still legally married on December 31st, your divorce could have gone through on January 2nd of 2023. But December 31st of 2022, you were still legally married. That means you cannot file as single. These same things come into play. You may legitimately be able to file head of household because you guys had been living apart for 6 months and you've got kids and whatnot. So that's definitely something to talk about with your tax pro. If that's not the case with you, maybe you guys just separated at December, so you can't meet that 6-month time frame. That means we're still talking about married filing separate and married filing joint. That's it. Those are your only statuses. Now, in that case, a lot of times the advice is obviously people are not getting divorced because they trust each other and everything is marital bliss and they are just thrilled with the decisions they're making. Usually that is very far from the case. So we do sometimes see it where people are able to file together, where they're still able to file married filing joint. They're able to communicate with each other to a point that they feel comfortable filing together. They're not concerned about fraudulent numbers, hidden assets, things like that. And that's awesome because again, that does typically work out in a more financially agreeable position for them. More frequently, they're not able to file together. They pay more in tax or they lose more in their refund because it is more worth it to them to eat that and file separate than to sign a joint tax return and be on the hook for something they don't believe is true. This is usually with our people who have businesses, because if you have W-2s, it's harder to hide stuff. But if you have a business, when you're getting divorced, the other spouse tends to typically be concerned about the accuracy of the financials, which is a legitimate concern. So we see that more frequently. If you file a joint tax return, I promise I'll wrap up quick. If you file a joint tax return, you're in the early throes of divorce, maybe your spouse owns a business, he's self-employed, and you do not. You get a W-2 from some unrelated employer. You have another job, you're getting pressured into signing by whatever reason, and you sign a joint tax return with said spouse, and you were concerned about the accuracy of the numbers reported. You are on the hook for that tax due. That means if that tax return says there's $10,000 due to the IRS, You sign said tax return, and now your spouse does not pay said taxes, which you probably don't know, because if you're getting divorced, you've probably already started the path of separating out your bank accounts. So you can no longer go into your bank account to make sure those taxes were paid. So you're usually just taking the spouse's word for it. And again, we're not in the times of marital bliss here. We're in the times of a lot of anger and a lot of frustration. So you are really just trusting that your spouse paid those taxes. But if they didn't, the IRS can come after you because it is a joint tax return. So that is always a very real concern. If I'm talking to someone who is concerned about that, and they do want to file joint because it's going to save them a bunch of money, I typically tell them just to make sure that they get some sort of, hey, send me the proof the taxes were paid. Let me see the canceled check. Let me see the, the transaction in the bank account. Just I'm on that tax return too. So just before I sign off on this, let's go ahead and make that payment so I can just be really clear that I'm probably doing this to help you. So let me just be really clear that it was actually paid, and I'm not going to find out in a few years that there's a problem. So that's problem one. The other thing that's really important to point out is if you file a married filing joint tax return, so you sign a tax return together, and then in 6 months you change your mind, whatever your attorneys are counseling you against it, something comes up, there's a lot of frustration, and you say, you know what, I'm going to change my mind. I want to file separate. You can't do that. Once you file a joint tax return, it cannot be undone. You can't now change your mind and amend it and go back to filing married filing separate. So that is a decision that has to be made before you sign that tax return. Now you can go the other way, which we sometimes see when things are really, really hostile, and it's the best way to go. The best decision in that case is we sometimes advise clients to file separately, married filing separately. They report their own income, they pay their own taxes, and yes, they pay more in tax. And then maybe things are able to be more amicable in the future. And then they can amend it to file joint. So you can go married filing separate to married filing joint, but you cannot go married filing joint to married filing separate. There's a whole nother conversation about what are you going to do if you file joint and you didn't know about income that you're now on the hook for, and how do I get out of it? We're not talking about that today. That's a whole big conversation all on its own. Just generally speaking, if you sign a joint tax return and that tax is not paid, which you probably don't know it wasn't paid because you probably don't have access to those bank accounts anymore, you are on the hook for that unless you pursue other options. So that was today's tip is or FAQ or whatever you want to call it, is Happy Valentine's Day. What do I do about my marital status for my taxes? So if you have any questions for you specifically, this is always a big thing that I can give you general advice, but you really should talk to your tax pro, because sometimes a lot of times the answer is to file, especially on the flip side, the divorce side. A lot of times the answer is it is more not advantageous, because it is actually more costly to file separate, but it is in their best interests to file separate to protect themselves. For the new couple side, again, typically it's more in their favor to file joint. They're usually happy with each other and there's nothing hidden, and we don't have those concerns. So usually it works out in their favor to file joints. But please, please, please consult with your tax pro if this is something that you're concerned about. Or, of course, give us a call if you don't have one, and we would love to help you. Happy Friday, and I hope you have a great weekend.